Good morning, traders. It's 8 a.m. Chicago time on Tuesday, the 16th of May, 2023. This is episode number 2470. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. How are we doing today? How are you feeling? Are you staying in control of your emotions in this terribly choppy market that we've had for quite some time? Or are you getting frustrated that you're sitting here and not making money? Or what is on your mind? Let's take a look at the Convergent Trading pre-market summary sheet this morning. Same as usual, mixed to slightly risk off. We have the S&P down 10.75 points. That drop occurred in the last, I don't know, what is it? The last maybe half hour or so. Overall, this morning we had Home Depot reporting. What's going on here? We had Home Depot reporting. We had Baidu, Tencent. After the close, we have Vodafone. I'm not going to talk about earnings. You can look that up. There's just a ton of resources for equities. The whole world knows about equities. We're the special people who trade futures. There's a raft of Fed speakers you could see there on our sheet. We had a really hard time listing everybody. I mean, there's just a ton of news based or scheduled noise is what I would call it today. What's important, though, this morning, Great Britain reported the unemployment rate for March, which is stale at this point, at 3.9% versus 3.8% expected. Claimant count at 46,700. The expectation of a claimant count is a drop of 15,000. So that's a big swing up. The prior's 26.5. So employment softening in this for April in Great Britain. The rest of it, we got the Eurozone GDP growth rate at 0.1%, and we got the year-on-year second estimate for Q1 at 1.3. Key number, the ZOO Economic Sentiment Index out of Germany, this is a big one, came in at negative 10.7, pretty pessimistic versus the expectation of negative 5.3, so it doubled the expectation. The prior is 4.1. This is the consumer sentiment, the consumer index for May. And then the inflation rate out of Canada came in at 4.4%, was expected at 4.1%, and the prior is 4.3%, so worse year on year for April. For the month on month came in at 0.7% versus 0.6%. Retail sales this morning in the U.S. came in worse at 0.4% versus 0.8% expected, better than the prior month. This is for April. And then we've had Fed's Mester making comments. We've got Fed's Bostic currently speaking. We have industrial production coming in at 9:15. Treasury Secretary Yellen, and you can see the rest of it there. I mean, there's just a ton. Cap utilization, business inventories, NAHB housing market, Fed's Bar, Fed's Williams, Fed's Logan, Fed's Bostic this evening. We have also a meeting that was set up between President Biden and McCarthy and some of the principals on the Hill regarding this very, very important debt ceiling negotiation that the market's kind of in a holding pattern. It's just circling the airport. Right now, we're waiting for further input there, what happens to treasuries and so on if we default. Japan has GDP growth Q-on-Q prelim for Q1 this evening at 7:50, and that wraps up the day. So there's just a lot of noise. If you're with Convergent, don't forget, to turn on your CT news feed to make sure you're getting the news as it comes through. Not that you would be trading the news, but more so you know when it does hit the wire, and or when to anticipate it, because you're going to get warnings. Other than that, the Dow's off 95 points, and the Russell is yet again down over 0.5%. So this is what we're seeing. The big news really overnight was from China. So let's run through that. Chinese industrial production retail sales data lower than expected. So there's kind of a whisper about China stimulating, which so China's growth after the reopening, which was a big deal, that growth has not met expectations at all. And so the idea here is that they expect the Chinese government to do something about that, to stimulate in some way. Fed remains committed. So Fed's master says lower neutral interest rate could return. Fed remains committed to getting inflation back to 2%. Vodafone to cut 11,000 jobs. Ford to scale back investments in China. EU approves Microsoft's takeover of Activision. Blizzard, this merger for Microsoft was rejected by the UK and by Great Britain as well as the US, yet the Eurozone opened it, allowed it. The auction today is absolutely and utterly and horribly balanced. Terrible action in the overnight session. 150,000 contracts traded. We've got 16.25 points of range, and the highs up against the mid-century figure of 41.5150 and the V-Box 41.44. The lows 41.35. If you recall, the 35 has been in play now for about 3 weeks. So has the 50. So has the 60. So has the 70, and so has the 80. So it's just like there's just it's funny because today I'm doing a trade walkthrough for Convergent members. If you're part of Convergent, at 1 p.m. we're doing, instead of our weekly trade talk, we're doing a trade walkthrough, and it's looking pretty bad. Hopefully we break here and can push through 41.60, challenge a 41.70 weekly high, and finally get to that 83 and break out of this range. But I don't have high hopes. So it's just an interesting market. Let's take a look at the charts. Here it is. I posted this morning. This is a daily chart of the S&P, so you can see the daily candlesticks, but the profiles, the volume profiles here are weekly. These are weekly profiles, and then you could see the last 2 weeks have overlapped each other pretty badly, and this is the action for yesterday. So you could see that we're really coming in when it comes to value. We're really coming in. We're continuing to converge on the 41.53. So again, these blue profiles are weekly profiles superimposed on daily bars. And there's just more and more and more compression. As I talked about at length yesterday, let me clear my throat. As I talked about at length yesterday, the idea here is to watch out for a break from these zones. So yesterday, no action at all for me, none whatsoever. In fact, yesterday I had zero interest in the market, even though it traded, it had a couple of decent plays. But there's just no action for me. It just isn't worth looking at as we expand this this balance forward, and so it's just been we've kind of been sitting sideways, really, and not much to add from day to day. But we still need to watch. That's the 63 area, the 70 area, and then below us, the 11, 12 area, and then we get into the gap. A breach of those gets my attention. A breach of those will have me looking for the quality of the pullback to get long into the next area up, which is at 41.8583, or a breach down has me looking for the pullback higher for a short into the 40.97, and then keep a runner on to look for the naked point of control that's way down here at 40.75. That becomes the target on the downside. And then on the upside, the target is really 41.88 and then 41.95. Extended target 42.06 and 42.24. 42.24 if we can break out of this range. The important thing, though, is a lot of people have committed to this range. I posted a chart of the MES that was shared with me by CME, by members of the CME group, and it just shows open interest is really high in the MES, 300 something thousand. I mean, it's really, really a lot of people are very, very heavily positioned in this chop. Historic highs, the top 10 open interest volumes, a lot of them have occurred in the last few sessions. So there's just people have put a lot of irons in the fire. And so when this thing takes off, because for every buyer in futures, there's a seller, a lot of people are likely to get pushed out. So again, unless it breaches these key levels, there's not much I can say to you during these trader bites other than to maintain discipline and just simply wait for those setups. I mean, whereas normally I would say on, not during high volatility, but let's say throughout last year, which was pretty decent volatility, I would say I see somewhere between 5 and 12 setups a day, something like that. Currently, I might see one. If lucky, I might see two. And that's just not a good environment for me. I'm more likely to lose money than make it. So things have to look really, really good for me to engage in this market at all. So I'd caution you from finding or creating trades by, drilling down to very, very tight quarters, very tight duration periodicities in your charts. I mean, this is just really, really awful here, this action. And you can see that the overnight session has a point of control, has the VWAP and the mid right on top of each other, having tested the low to the high and back with a completely balanced profile. To me, this says keep your hands off the mouse on the open, and that's the kind of action we have today. So I would warn you again against trying to invent trades or maybe moving down. This is actually a 4-tick Renko. I've had to move from a 1x8 PNF chart to a 4-tick Renko so I can better see the rotations down here, so I can see what's really dominating and what's not. The Renko chart does a better job of that than a PNF chart. But this is the kind of environment you want to go to a 2-tick Renko or reduce it to a 3-tick Renko just to be able to see what's going on from inside these bars. As soon as you start doing that, that spells trouble. It just means instead of waiting for trades, instead of allowing the market having a bias, having a price map, having a bias, and then letting the market set up, we are actually out looking for trades, and nothing good can come from that. You suddenly become a scalper, and it's just like it's very hard to manage your the quality of your process and how you're executing against that process. By the way, that is the most important thing you should be measuring is What is the quality of my process and what is the quality of my execution against my process? You cannot, and I have said this before and I'll emphasize it again, you cannot measure your performance based on P&L. P&L, believe it or not, is a very poor metric with which you should measure yourself as a trader. Why? Because P&L is determined by outcomes. The outcomes in the market are random, absolutely random. They're not in your control. There are 4 pieces that you have to get right in order to have a winner. It's very easy to get any of those wrong. And so, in general, you don't want to measure yourself with profits. So if you find yourself feeling down and beat up because you have a negative P&L, or if you find yourself really happy because you had a strong P&L and that's all you can think of, or that's all you can remember about the day, you're still not going to be consistent. You still have not achieved stage 3 of competence. You're still in stage 2. You have to measure process. So if you're not sitting there measuring how your process is and how you're performing and executing, your state of mind while you're executing, you're still subject to volatility in your emotions and in your account. It's process, 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 process. Boring as heck, but this is the business of being a professional trader. Be sure to listen to that. Be sure to absorb that. It's very, very important. Measuring yourself with P&L is just cause for burnout. You're gonna burn out. Okay, so today, the first things I'm gonna look for in the S&P as I sit here and do nothing is which side does it breach? Then, let's say it breaches the downside. Let's say it chops around in here, breaches the downside. The next thing we're going to check once we have a breach is what is the quality of the return. Okay? We're going to look at how it's performing against the overnight low, and then we're going to be targeting the prior day's low as the most natural target to the downside. So we want to see if it's performing poorly, or does it just push back up to the open, or does it stall out and start moving lower? In this case, a scalp, because there's really no structure here, a scalp short would be initiated, and as close to 41.35.34 as possible, aiming for 41.23, which gives us a good 12 points or so, 10 to 12 points to aim for. You are wrong not at the overnight low. You are wrong right up here at 41.40 or above. So it's a wide stop. Keep it light and tight. Look for the prior day's low. Once we get to the prior day's low, if it bounces ahead of it or at it, I would call it weak. If it bounces ahead of yesterday's low, then it's very likely to come back in and retest VWAP, which is very likely to get dragged way down here. So this is the kind of nonsense that we have to kind of watch out for just to measure what the auction is doing in the morning. It doesn't mean you have to trade it. These are just things that give us clues early on as to, is the market tipping out of balance or is it continuing to be in balance? That's the whole effort. First thing is to figure that out. I'm not going to talk much about the NQ. It's in the same kind of posture, but the NQ is really foretelling strength. The NQ is, if you look at what it did yesterday, last night it really pushed higher than the day session. The NQ showing a lot of strength, and this is why it's looking to me like we're likely to break to the upside. The other reason I believe we're likely to break to the upside is when I zoom out, we're holding on to these 4,200 prices. Like, we're not moving away. We're not all the way down here at 40.76 and pushing down into the 3,800. I mean, we're just hanging on to these higher prices, so we're likely to resolve. So on the bigger picture on a daily chart, we have basically a flag, a push-up, and a flag pattern. And a much, much bigger picture, this looks like a pullback and a bear pattern, but I don't trade that time frame, so I'm not too worried about it. Looking at crude oil, I don't want to get too much into the weeds here today. Looking at crude oil, remember the expectation is if it continues to fight right here, the expectation it would move down and come right into the 68.70 area as the next key test. And it didn't do that yesterday, came right back in. To me, it looks for now like crude is very likely to run through these balance days right here and push right above 72. Crude looks like it's ready to attack 72 and push higher, and potentially another attack of the 74. So to me, crude looks like it is forming a base. Why? It had a spike down on very little volume and recovered quickly, and then it put in a higher low here in the last couple of days, put in a higher low, and it's not letting go of these highs underneath the next balance zone. So this balance zone is very likely to get attacked. Crude looks like it might pop $1 or so going forward. As always, I recommend trading crude. If you're going to trade crude, to trade it in the MCL, the micro crude, versus trading it in the full WTI crude contract, the symbol of which is CLM3 currently. So trade the MCLM3 if you're going to experiment in this product. It's a fine product to trade, in my opinion, but you know it's pretty technical, even though it's a fundamental product, which is great. You know what? I don't have much more to say. I'll leave you with that. The most important thing I want to tell you, though, is that tomorrow is the last Trader Bite for a week and a half. I'm going to be traveling on Wednesday night to Europe, and then I arrive Thursday morning, and I'm going to be there until the following Saturday. So no Trader Bite Thursday, Friday, and all of next week. It just doesn't make any sense for me to mess around with setting up a workstation while I'm traveling. So I will not be around, so don't forget to check in on the week of the actually we have Memorial Day. So I come back the 27th, and we have Memorial Day the 29th, and then I come back May 30th, okay? You'll see reminders on Twitter, and I hope to see you back here. We'll have a Trader Bite tomorrow, and then I hope to see you back here right after U.S. Memorial Day on the 30th. Okay, good luck today, and I'll catch you tomorrow morning. Take care.